Hello and welcome to another video in accounting. In this video we are going to discuss accounting for asset disposals. There are three aspects of accounting when it comes to non-current assets. Number one, we need to know what the accounting is when an asset is purchased, that is the acquisition of the asset. We need to know accounting for the usage of the asset, and finally for the disposal of the asset when the asset is sold. There is a video available on the channel which discusses the acquisition of the asset. There is also a video available on the usage of the asset which results in depreciation. So watch the videos on the depreciation on the channel. And finally, when asset is sold, we need to know the accounting for that asset. And in this video, we are going to discuss the disposals of the asset. So when an asset is sold, it can result in three situations. One, cash received is greater than the net book value. If cash received from the sale is greater than the net book value, there will be a gain on disposal. If cash received is less than the net book value of the asset, there will be a loss on disposal. And if cash received is equal to the net book value of the asset, there will be no gain or no loss. In this video, we are going to give you example of a gain and loss. Remember, we are going to compare the cash received from the sale with the net book value. And calculating the net book value is the most important step in this process. So let's look at the steps. Step number one is to update the depreciation, particularly if the sale is during the year. Step 2 is to calculate the net book value of the asset or the carrying value of the asset. Now this is the most important step, and this is where we are going to spend most of our time. Net book value of the asset or carrying value of the asset is the same thing, which is calculated by taking the cost of the asset minus the accumulated depreciation. Again, cost of the asset is generally known, and in the question it will be given to you. Accumulated depreciation you need to calculate. And accumulated depreciation means the total depreciation for that asset from the purchase date up to the sale date. So we'll calculate that. And finally, when we know the net book value, we can compare that with the cash received to calculate a gain or loss. So we'll give you two examples, one for gain, one for loss. So let's look at the first example. So a machine costing $20,000 with expected useful life of 4 years and a salvage value of $2,000. It was purchased on January 1st, 2021 and was sold on July 1st, 2024 for $9,000. The entity financial year end is 31st December and uses straight line depreciation method. So let's calculate the gain or loss on disposal. To calculate gain or loss, we need to take the cash received from the sales, which is 9,000, minus the net book value of the asset. We are not given the net book value of the asset, but we know how to calculate it, which is cost of the asset, 20,000, minus the accumulated depreciation. Again, accumulated depreciation is not given to us, and this is the depreciation from the start of the asset up to the sale time of the asset, the total depreciation. So we are given enough information to calculate the accumulated depreciation. Since the business uses straight line method depreciation and the formula for straight line depreciation is to take the cost of the asset, 20,000, minus the residual value, also known as the salvage value, $2,000 given in the question, and divide that by 4 years. This will give us depreciation for 1 year, which comes to be $4,500. Now you can take that $4,500 of 1 year depreciation and multiply it by how long was this asset used by the business. So we know it was purchased January 1st, 2021 and was sold July 1st, 2024. So that's 2 years and 6 months. So this asset was used for 2 years and 6 months. So if we take 4,500 and multiply that by 2 years and 6 months, that will give us the accumulated depreciation, which we can minus from the cost of 20,000 to give as the net book value. And once we know the net book value, all we need to do is minus that from the cash received, 9,000, to give us either a gain or loss. So let's look at the step in more details. So step number one is to calculate the net book value of the asset, also known as the carrying value. And step two is to calculate the gain or loss. Now we know the cost of the asset given in the question, $20,000. We don't know what is the accumulated depreciation. Again, it is the depreciation from the purchase time up to the sale time. But we can calculate that by first calculating depreciation of 1 year using straight line method. That's $4,500. And then ask ourselves, how long was this asset used? We know from the start date up to the purchase date up to the sale date, and that will give us 2 years and 6 months. So the accumulated depreciation is $11,250, which will give us a net book value of $8,750. Let's compare that with the cash received, $9,000, to give us a gain of $250 on disposal. Now that we know the gain on disposal, it is time to record this in our books. Now recording the sale means to record the cash received and remove the asset from the accounting books. So there are two things associated with the asset in our books. One is the accumulated depreciation and one is the asset itself. We need to remove both of them. So the entry would be to debit cash for cash received and debit the accumulated depreciation and credit the machinery for this to remove it. Look, accumulated depreciation is generally debited when in the transaction when it is calculated. So we need to do the opposite to remove it. When the opposite of a credit is debit. Machinery is when it is purchased is debited. Since we are going to remove it from our books, we need to credit it because it's been sold, so we have to remove it. And the gain on disposal will be credited as a balancing figure here. Let's look at one more example. So on April 1st, 2023, Basecamp sells office furniture for $12,000. It had originally purchased on January 1st, 2019 at a cost of $60,200. At that time, its residual value was estimated to be $5,000 and the useful life of 5 years. Basecamp uses straight line depreciation method. So let's calculate the gain or loss. Again, we are going to look at the cash received, which is $12,000, minus the net book value, which is again not given, but we can calculate it through taking the cost of the asset, $60,200, minus the accumulated depreciation, which again is not given, but we can calculate that. Since the business uses straight line method, which in the formula for straight line method is to take the cost of the asset, 60,200, minus the residual value, which is 5,000, and divide that by the useful life of 5 years given to us in the question. This will give us depreciation for 1 year. Now, once we know this depreciation, we need to ask how long was this asset used? So this asset was used from January 1st, 2019 up to April 1st, 2023. So that's 4 years and 3 months. So that 1 year depreciation multiplied by 4 years in 3 months will give us the total depreciation for this asset. In other words, it will give us the accumulated depreciation, which we can minus from the cost 60,200 to give us the net book value. And then the net book value will be minus from the cash received, which is 12,000, to calculate gain or loss. So let's look at that in steps. So step number one is to calculate the net book value of the asset, and step two is to calculate the gain or loss. This is how we calculate the net book value, and this is how we calculate the gain or loss. So cost we already know, 6,200. We don't know the accumulated depreciation, so let's calculate depreciation for 1 year using straight line method, which will give us $11,040 per year of depreciation. Now ask yourself, how long was this asset used? So look at the purchase date and the sale date and find the difference between that, and that comes out to be 4 years and 3 months, which means the total depreciation for this asset was 46,920. So that is the accumulated depreciation. This will give us the net book value of $13,280. Let's calculate that with the gain or loss by comparing the cash received. 12,000 minus $13,280 of net book value to give us a gain or loss, in this case a loss of $1,280. Once we know that, we need to record this transaction. So first we need to record the cash received, and remember to remove the asset from the book because it is sold. And there are two accounts for that asset. First, the asset itself and the accumulated depreciation. And remember, to remove them, you need to do the opposite of what they are normally the accounting is for them. Accumulated depreciation is normally credited, so to remove it you have to debit that, and the asset account is normally debited when it is purchased. To remove it we need to credit it. So here is the journal entry. So on April 1st, cash will be debited $12,000. Accumulated depreciation will be debited to remove that, and since this is a loss on disposal, and a loss will be debited, and the furniture account, which is the asset account, will be credited to remove this asset from our books. Now this is how we calculate the gain or loss on disposal. I hope this video was helpful. Do watch the videos again, share it with friends, and remember to like and subscribe to the channel, and do click the notification icon to be aware of the future videos. And I will see you in the next video.